Hi YouTube, just doing another free trade portfolio update today with my stocks and shares also. And obviously I have a general investment account with them for my Chinese stocks. I'm just going to be going through to you today what I've been buying this month, what I've brought into this month, and obviously the performance of the last 7 days since my, last week's portfolio update, and what companies have performed the best. This is the DIY Investing Guide channel, so if you're new to the channel, please subscribe to the channel and smash that like button to help the channel grow. I'm just going to be going through basically companies on my watch list on this channel, doing portfolio and portfolio updates. I'm going to be doing in-depth analysis onto different companies on my watch list, and see how my performance goes over the course of 2021 in the stock market. I've only started this portfolio this year, so I want to see how it goes with a bit of experience that I've had from the last couple of years. And this week I've obviously been going through what I've brought, why I've brought it, my thesis behind the stock, and why I think it's going to do well over the next few years. And that's the main company I've brought into this month is Boohoo. Obviously, as you can see through July here, I've brought 200, 300, 400, 500, 600 pounds worth of Boohoo shares. Since I'm ranging from prices from £3 all the way down to £2.50 a share. And I've got my average price down from about £3.18 a share to £2.94 a share. It might not seem massive, but in terms of returns, it's going to add an extra 10% on over the course. The bigger the returns are now, when the share price recovers, I'll have an extra 10% that I've made on the stock. Even if I trim my position down at about £3 a share, I'll still have made an extra 10% because I've got my average price down. And I'm currently 10% down on this stock, but obviously I'm not worried about that. And if if I can get my average price down any more further, I will do, because I just think it's a brilliant company. But it's had its fair few controversies in the last 12 months or so. Yeah, so the performance of it this month is already 16% down for the month. But obviously this week it's sort of hovered around. I think it's plateaued around the 260 mark now, so it's gone up and down, but stayed around where it is. Now my thesis behind Boohoo is that, obviously the controversies that happen and bring the share price down quite a bit, and I've kept the share price, below where it should be, around about the £4 mark, £3.50 to £4 mark consistently. I think this would be trading at £5 a share now if you hadn't had all the Leicester sweatshop scandals and stuff like that, which you've probably heard in the news or on, if you're part of the social YouTube scene on with the stock market. You'll have seen that, obviously, and it's a constant thing now. It's constantly coming up in the news, and there's always something. The media are quite, its name's tarnished within these things, and it's only been 12 months. It's not been that long, but I don't think that's what's brought the share price down rapidly in the last month or so. I think it's the lawsuit in America, where there's a £100 million class action. That £100 million class action, with Boohoo being sued £100 million, is sensationalised in the news, and basically I think it's been a bit orchestrated, and I think they'll settle out of court, and I think it'll be for nowhere near £100 million, if I'm honest with you. It's basically saying that Boohoo have inflated the price of the products so that they can put them on sale and mislead customers, thinking that the customers are getting a bargain, whereas they're not really getting a bargain. So I had looking at this and I thought the share price has dipped. I liked it at £3. I like it even better at £2.50, £2.60. So I thought, let's have a look at this. £100 million, worst case scenario, end of the world scenario, they get sued £100 million. Don't think that's going to happen. Very unlikely to happen. Chances are very minimal for that to happen. They've got £276 million on the balance sheet and no debt, and good free cash flow coming from the company. That's without even taking into consideration that they paid £50 million for dividends. It's not even taking that into consideration. You think about all the businesses that they acquired, it would be a setback for the company. It would knock the share price back even further. But as a long-term investor, I'll just buy more because I know that this company's going to survive. It's very hard, as Peter Lynch said in it's very hard for a company to go bankrupt with no debt. Have you ever heard of a company with no debt to go bankrupt or go out of business? So they've got plenty of cash on the balance sheet, got plenty of cash flow, plenty of cash coming through the business. And from what I know, it's still doing very well even after the pandemic. Still having a lot of customers and new customer inflows and a lot of orders and stuff, etc. Even with the negative news in the press, it hasn't really affected the numbers of Boohoo. And it's just a growing business, and it's going to be a beast of a business in the future. So my basis on this is, at this price, at this share price currently, what can I lose? In 5 years' time, what's the worst case scenario? And the worst case scenario is the company grows at 15% a year, which, on the low estimates of its growth, 15% a year on average compounded for the next 5 years. The share price, the PE ratio goes from, because it's quite a lofty PE ratio at 35, goes from 35, half that to about 15 to 17 PE ratio. The share price is still more or less where it's at. So the worst case scenario is I have the same amount of capital on the table. I haven't lost any money, but I've also not made any money. A 0% rate of return over 5 years is terrible. That's the worst case scenario. But I can't lose all my capital, and I can start again. Best case scenario is a 6-bagger, and the middle case scenario is a 3-bagger or doubling my money, which would be 15% rate of return over. So at this price, it's not a bad investment. It's a 50-50% chance. It's a 10% chance I'll conserve my capital and don't make any return on my investment, and it's a 90% chance that I'll make either a 2, 3, or 6-bagger on my money. That's in my opinion, after my research and what I think. Do your own research. I'm not a financial advisor, but that's my opinion on this company. So heads I win, tails I don't lose much. So that's my basis of buying into Boohoo. And the cheaper the price gets on the stock, because it's going to grow, fundamentals are going to grow, and it's not going to go out of business because it's got no debt and it's got a healthy balance sheet. So the fundamentals are going to grow. It's going to be worth more in 5-10 years' time than it is now. A lot more, in my opinion. So the short-term noise and all this is just more of a buying opportunity for me. But that said, I have filled out my position here of just over £1,000 because it is a fairly small portfolio. I don't want to have a £5,000 portfolio with £4,000 invested into one stock. Because if, for instance, worst case scenario, I made no money on my money, I might as well have just left it in a savings account for the last 5 years. So that's why I do look for other quality companies to diversify my money in. I still want the portfolio to be concentrated. So I'll only ever have 20 stocks maximum in this portfolio. But, obviously with it being a small portfolio and I'm only starting this year, if I finish 2021 with 4 or 5 stocks in the portfolio, I'll be happy. And obviously I'll go on in a minute. I'm going to be looking at 3 companies next month, over the next week or so, researching them, the fundamentals, the numbers, the valuations on the company, to see if that was going to be the next position that I'm going to be adding to this portfolio, because I'll only be adding one position at a time really, so I could concentrate and put a decent amount of capital into that position, and I'll pick my best idea out of the 3 then. 3 companies I'll be researching are Corsair Gaming, which just had missed on its current earnings report, but I think it's a quality gaming, specialises in gaming gear, and obviously it also specialises in PC gear and PC equipment and accessories. I'll be looking at Games Workshop, which looks at making figurines and games and role playing and World of Warcraft and Warcraft 40,000, them sort of games. That's what it looks into, and it has these shops which are like community shops where they come in, you buy stuff, but it's more to get people into the game in the sense of community. They're like clubs almost, and because it does sell through third parties, it's a manufacturing business with high margins, and it's a great company. The valuation does look quite high on it, but that said, I still think it's got a durable book of it. Imagine, I think it's growing, but I'll talk more about that if that's the company I'll go for. And then the final one will be Beyond Meat, which is very similar to Tattooed Chef, but it's more of a meat substitute and food services going into. It's recently just got a partnership with Pizza Hut, as if you've not seen, for its meat free, it's meat substitute pizzas. So those are 3 companies I'll be researching this week to see if and they may may have slipped into the portfolio by the next portfolio update, a starting position in one of them companies, but we'll see. Tattoo Chef really hasn't done anything this week. Obviously, it's just pretty much bounced back between the mid-19s to the mid-20s, so it's really done nothing. Obviously, the Kroger deal was announced last week, but it has got earnings coming up, so it'd be interesting to see whether there's a dip on earnings if it misses on its earnings, because it is quite a volatile stock. It doesn't really hit the metrics that I like them to hit for high growth quality companies, but it's such an early stage, and it is a high growth company rather than a quality growth company, because it's too early to tell whether its earnings are quality, because it's still growing sales and revenues, and that's the main thing. That's the main aim for that company at the moment. And with its expanding its stores in America, it's pretty much on target to do that. And then what can I say? Facebook's just a beast of a company, isn't it, really? And it's looking at going in e-commerce, and it's going to really put the whole shopping experience of its Facebook shops, from payments to collections to even the storefronts are going to be Facebook shops on the system. It's looking to increase its e-commerce, and I think that's the way it's going to compete going forward. It's still it's still a beast of an ad revenue company, and it's still my biggest position in this portfolio. It had a bit of a dip after earnings, but it's recovered quite well, and I'm still 15% up on this stock, which I'm really happy about. If it does have a bit more of a dip, I wanted it to get below the 340 mark, and I was going to add a bit more to my position. Any of these positions now dip, I will add to them, because I like all of the companies, especially Facebook and Boohoo, two of my favourite companies. Any of these, so I think that's where it's going. It's getting, that could affect Shopify's earnings as well, because a lot of Shopify stores are through the Facebook marketplace. So that's my portfolio. It's had a pretty good week. If we just have a look at the insights on the portfolio, breakdown's not changed much, and we'll not do the 1 month graph because we know it's not been a great month for the portfolio. We'll do the 1 week graph. And I'm up slightly this week. I've been buying into Boohoo. My investments are 1% up, and the index is, what I measure it against, the FTSE World ETF, is 0.7% up. So I've actually outpaced my benchmark this week, which I'm happy with. But obviously it's a longer term look on it, so I'm buying companies on the cheap and hoping in 3 to 5 years that I've outperformed the market, and found potential multi-baggers. And then quickly, we'll just have a quick look at Alibaba, because everyone's talking about this, and I have quite a big position in this portfolio. But every time I think I fill my position out, the dip just keeps on dipping. And I know there's risks of it delisting and whatnot, and I've spoke about Alibaba. It is an ADR, so there is risks there, so please do your research on the ADR. We all know it's cheap, we all know it's a great company, but there are delisting risks, there are risks involved with investing in a Chinese company. We're not directing, you can invest with this in the Hong Kong exchange, direct shares. And people say that you haven't got no voting rights if you own it as an ADR, which is true. You've got less voting rights. You don't actually own the company, you just own it as a shell. It's true, all of this is true. However, if they do delist the ADRs from the New York Stock Exchange, the share price is going to plummet, regardless of whether you're holding it in an ADR or shares. Also, the voting rights is even if we had a 5-figure position size in these, the company's a £600 billion company. My ownership of Alibaba is 0.0000001 of 0.0001% of the business. So it's not really, I know I'm not going to be hitting waves anyway with this company. Over the last 7 days, it's done all right. The last 7 days, really, this has, because it was, all the way at the 180 mark at one point. I currently own 11 shares in the company, and I'm pretty happy to keep holding this company. I will be if it stays below 200, I'll add a little bit every month to it, if I'm honest. It's in a general investment account, so I could be doing some loss harvesting at the end of the year and better ISA and some of the money into my my ISA accounts. Or conversely, if the price goes up, I might take some profits and move them into an ISA account, as long as I don't hit over my capital gains tax allowance. But I think I'll be well within that. I'd have to have about £12,000 worth of Alibaba doubling the next year, which I can't see happening myself. For me to even hit, first of all, to get the £12,000, I wouldn't put £12,000 in Alibaba, and secondly, for it to double. I think the best case scenario is it ends the year on $300. Worst case scenario is it goes to $150, and I'll just keep on buying more and more. I've got a position in my lifetime ISA with Hargreaves Lansdown that lets me hold ADRs in the ISA, so I'll just bed an ISA into that account, and then that fills up my lifetime ISA more or less for the year. Well, a big portion of my lifetime ISA allowance is filled up, then I can just concentrate on my stocks and shares ISA. So that's the plan with that. Overall, I haven't got a massive, it's not my whole life savings aren't in Alibaba. It might look a lot because I've got it all in one account there on Freetrade, but I just like to buy it on Freetrade because you can buy £100 a month when it's dipping, whereas with other investing platforms you have to, your AJ Bell's, your Hargreaves Lansdown, if you want to buy it after the dip, you have to, really put a substantial amount of money in, because you'll get charges and fees. And Alibaba's not that sort of company that I want to be whacking £5,000, £6,000, £7,000 at each time, because it is a risk. It is a risk. The company in itself isn't a risk. The company it's going to be a beast of a company in the years to come, and I think it's going to be a big, a big winner for me. If it doesn't double in the next 5, it's going to triple. So I'm just going to hold it for the long term. I mean, delisting risk it's not like it's going to delist tomorrow. It could be, you've got at least 3 years to think about these things, It's not just going to delist and be taken off the market tomorrow like that. So it's just a lot of the negative news headlines and stuff like that. Even the earnings was like, mate, because it missed on its sales on the analyst expectations. If you look at the actual earnings year on year comparatively, it was an amazing earnings update. But that's not the way the market's seen it. I hope you've all enjoyed this video. I've talked a lot about why I'm investing in these companies and my thoughts on these companies. If you agree with my comments, if you disagree, just drop a thought in the comment. If you've got any other thoughts on these companies, drop your thoughts in the comment. If you like my portfolio, let me know. If there's got any questions, please ask. I'm not a financial advisor, it's just my opinion, any answers I'll give. And please just smash that like button. It's a growing small channel. Help the channel grow, and subscribe to the channel. I hope you've all enjoyed the video. Have a great day.